Welcome back to Overtime. Gold got its 26th record close of the year and its best week since June. Still, the commodity gave up a chunk of today's gains after the White House said it would soon clarify reports of tariffs on gold bars. Well, let's bring in Tim Seymour. He's founder and CIO at Seymour Asset Management, also a fast money trader. Happy Friday, Tim. So at these near highs, with these politics, can gold still play a traditional role in your portfolio?
My guess is people have asked this question at various points over the last 20 years, and gold's 20-year chart is one of the best ones out there. I think the same dynamics which have us setting those record highs almost on a weekly basis are alive and well, and they are trends that are not just about the end of U.S. exceptionalism or suddenly the end of the dollar as a reserve currency. I think dollar remains that way. The interesting part of the trade, though, really has been that the gold miners are now starting to outperform, and they typically, historically, had a nice beta to gold. But if you look at the GDX, massive move, so outperformed the underlying metal by about 15% in the last 3 months and 50% year to date. I think gold miners, which have operational leverage, which for the first, I'd say, year of this big gold move, people were focused on the cost inflation they have, but they are generating massive free cash flow. Analysts have to upgrade their base price and their gold models, and it leads to major upgrades, and I think there's a lot more to go.
Yeah, and of course, if interest rates come down, carry costs come down, and that's another tailwind for gold here, too. Now let's turn to earnings next week.
100%.
Yeah. Cisco, it's one of the names that's reporting next week. It hit a 52-week high today, and it was the second best stock in the Dow, right behind Apple. What are your thoughts on Cisco?
It's back to the future for certainly feels like that for the market with Apple, but for Cisco, the story is a more predictable earnings stream. So this rotation into security and software and then the networking dynamics that at least I think we've heard pretty good news here. I think the street's expecting pretty good numbers. It leads to a place where Cisco is the cheapest mega cap tech stock out there. It doesn't have the growth of others, but in a mid to maybe growing high single-digit EPS profile at 17 times. A small re-rating means I think the stock's going to continue to go higher. They have cyclicality, but they have somewhat de-risked the business, and I think a higher margin business means a higher multiple.